Hello everyone, hope I'm audible to you all. Let's get started with whatever we left last class. So guys, firstly I think we were solving this sum, which is a consolidation sum asked from your examination itself, right? Wherein we had to prepare the consolidated statement of profit or loss, wherein we actually did an adjustment profit calculation also, right? So I think here the only mistake that they have made, because of which it was a bit confusing, is that nothing but they've not included the goodwill impairment, right? So since the goodwill was measured at fair value, the goodwill impairment is also to be included here. So we will just include the goodwill impairment of 1800, and thus our adjusted profit will be 1750 and the NCI allocation to the profit will be 437.5, right? I'm just removing this value. Yeah. So guys, yeah, just ignore this part also. I'll just re-explain the allocation. So NCI is 25%, that is 437.5. So the profit attributable to NCI will be 437.5, and this will be nothing but the difference between the profit and the amount of profit allocated to NCI. Then comes these two values. So I'll just explain you these two values as well, right? So let us understand these two values now. That is the total comprehensive income allocated to the non-controlling interest and the group as a balancing figure, right? So firstly here, the profit which is allocated to non-controlling interest is 437.5. And if you want to include the total comprehensive income, then in such a case, you will also take the total valuation, that is 2100 was the subsidiary fair valuation in the post acquisition period, correct? So this is the revaluation surplus of the subsidiary's asset, which 25% will go to NCI. So we will just add that value to the total profit, that is nothing but 2100 into 25%, that will give us 525. So the total comprehensive income which is attributable to NCI is going to be nothing but the sum total of the profit plus the post acquisition valuation, correct? So the post acquisition valuation is nothing but 2100, out of which 525 is allocated to the total comprehensive income. Thus, here the total value to non controlling interest will be 962.5, and to the group will be nothing but the balancing figure, that is nothing but total comprehensive income minus the value allocated to the non controlling interest, which will be this value. In your solution, when you go through, it could be a different answer, and probably it might be because there would be possibly a mistake there, or they might have found out some different accounting, I don't know. But an appropriate accounting would be this, wherein we also include the goodwill, because if the non-controlling interest is valued at fair value, obviously the goodwill impairment must be allocated to the working note of non-controlling interest, which is for statement of profit or loss. Okay, so I hope this sum is clear to you till here. If in case it is not clear, then in case guys, just skip this part, and if you all can understand it through the sheet, or you might find a separate solution to it, you can just understand that. Okay, any which ways, our main goal was to achieve a profit and a total comprehensive income which is appropriate and which is as per their calculation, right? So I hope this sum is clear to you all. And this was taken obviously from our mock paper only. So I'll just go back to the mock paper and also the mock paper answers that we had given last class. Let us check that also, if in case there are any wrong answers to that. Right? So ACC qualification, financial reporting. We'll go to past exams and question practice. From there, we'll log into our practice platform, which will bring us to, stating our credentials and logging in to the website. Once we log in, we will go to mark to identify the examination that we've given. So you can see a pre-September 2023 mock exam. The examination that we have given is yesterday, that is August 27th. So I click here, self-mark. Okay, so we have scored 60 on 60. That is, all our answers are correct, right? So each and every sum that we have done, all the solutions are correct, guys. I hope all these small questions were clear to you all, right? And moving on to the 31st question, we've also done this sum completely. We just did it, right? The statement of profit or loss calculation. So you can go through the solution later on for this. Now, moving on to the next question. That is nothing but the 32nd question, guys. Okay. So let us get started with the 37th question. So sorry, guys. Yeah. Okay. I hope now it is visible to everyone. So let's get started with the question and then look at the required information as well. So the following are extracts from the most recent financial statements of Griffin Company, which is a public company. The statement of profit or loss for the year ended 31st December 2007 and 2008 information has been provided to us. Okay. Here revenue has been given as 87,300 and 118,500. Cost of sales has also been provided. Gross profit has also been given. There is a profit on the sale of a particular division, right? So for that we have an adjustment or a note given to us. So profit on sale of a division has been given. There is also distribution costs, right? Administrative expenses. So technically we have our statement of profit or loss for 2007 and 8. Okay. So we have also been given the statement of financial position as at 31st December. Okay. Now heading on to the adjustments, guys. So let us look at the first adjustment. Based on Griffin Company's financial statements extracts, the following ratios has been calculated for the year ended 31st December 2007. So these are the ratios which are already calculated for 31st December 2007. By the end of 2007, Griffin Company concluded that one of its divisions was no longer a good fit with the company's strategy. So on 1st January 2008, Griffin Company sold the net assets including goodwill of the division, which had been independently operated, and they sold it for 19.2 million cash, and on which they made a profit of 2.4 million. That means the carrying value of the complete operation or the cash generating unit which is sold, that is nothing but 19.2 million cash received minus the 2.4 million profit. So you will get the carrying value, correct? So the division reported the following results for the year ended 31st December 2007, which have been included in Griffin Company's statement of profit or loss. So this is the profit and the statement of profit or loss complete of the division which is sold off, and these values, be it the revenue or the cost of sales or the gross profit and everything, that has been included already in the 2007 statement of profit or loss. That means the revenue of 1,18,500 already includes the revenue of the division which is sold off, with that is 37,200, right? Lastly, they've also given us the industry average. So in the third adjustment, they've given us the following is a list of comparable industry average key performance indicators for 2008, calculated in the same way as those of Griffin Company. So these are industry averages provided to us for 2007 and for 2008, right? So now let us look at the requirement. I think we've gone through the whole question here, right? I hope the question is clear to us. Let us look at the question stem. So for Griffin Company, the first requirement is calculate the equivalent ratios to those in note 1 above for the year ended 31st December 2008, but excluding the profit on sale of the division. So don't include the profit on sale of the division. Second one, calculate the equivalent ratios to those in note 1 above for the year ended 31st December 2007, excluding the contribution made by the division that has been sold. So the division that was sold, all of its revenue, cost of sales, everything is going to be eliminated, and then we will get an adjusted 31st December 2007 ratios also, right? So we will be given 4 marks for all of those ratios, and the ratios that we are supposed to calculate is only the ratios which are mentioned here, right? So you can see here, we have to calculate the gross profit margin, the operating profit margin, the interest cover, and the net assets turnover. Okay, so we have to calculate these 1, 2, 3, 4 ratios here. Okay, so Yes, also return on capital employed. So 5 ratios. And return on capital employed is calculated as profit before interest and tax divided by capital employed is calculated as total assets minus current liabilities. Okay. So we have been given this information and we will be scoring 8 marks for calculating these ratios here. Lastly, your answer should provide an explanatory note for the calculations wherever it is appropriate, and you're also supposed to analyze and compare the financial performance and position of Griffin Company for the year ended 31st December 2008 and 2007 based on the ratios calculated in part A, right? So that means you have to compare the ratios which are calculated in part A. That means the comparison is going to be between 2008 and the adjusted 2007. That means nothing but the 2007 ratios which are calculating excluding the contribution from the division which is sold off, right? So we will first calculate the adjusted profits, adjusted gross profit margin, operating profit margin of 2007, which excludes the contribution made from the division which is sold off, and then compare that adjusted 2007 ratios with the 2008 ratios. Okay, so let us get started. Firstly, we will understand how we are supposed to calculate both of these ratios. Okay, so I'll just hide the question stem now and focus on the question which is provided to us. Right? So let us get started, guys. I hope this sum is clear to you all. Now we'll start with the second sum of our pre-September 2023 mock, right, of section C. Right? So let's get started. Firstly, we will calculate the equivalent ratios of 2007 as per question, adjusted 2007 and 2008 ratios. Okay, so we will prepare for 2007. Firstly we will prepare for 2008 ratios. 2007 also we will prepare, but these are the adjusted ones. And also, wait, let me just align this. And okay, and 2007 which is mentioned as per question. Okay guys, now here firstly we have the return on capital employed, right? And as per question, whatever are the ratios mentioned, we'll quickly mention that first. So gross profit margin, right? Then there was operating profit margin. Then what else is there, guys? Interest cover was there. And lastly, our net assets turnover, right? Okay, rather than doing this, I should have left one space in between. Yeah. So I think also the calculations I can show you here. Okay. Let me just leave 2 spaces. Okay. Here also. Okay, guys, let's get started firstly with our return on capital employed. Right? So firstly, we'll calculate for 2008 because it is simple for 2008. So our return on capital employed is nothing but profit before interest and tax. So what is profit before tax? They've given profit before tax as 10,320. Correct? But this includes the finance cost. But the interest is going to be eliminated because you have to calculate profit before interest and tax, right? So what is the profit before interest and tax? Sorry, just remove this. I'll just state it here. Profit before interest and tax. It will be nothing but 10,320. That is the profit before tax, right? So in that, the finance cost is already charged. So if the finance cost is charged, in order to eliminate that, because I have to calculate profit before interest and tax, I will add that finance cost back, right? And as they've mentioned, you have to calculate the 2008 ratios excluding the profit on sale of the division, right? So this profit has increased my profit. The sale on division profit has increased my profit. So in order to eliminate it, I will reduce it from my profit, right? So while reducing it from my profit, I will just reduce it here minus 2,400. So the profit before interest and tax is 7,930 for 2008, right? And our capital employed. So capital employed, guys, is nothing but total assets minus current liabilities. So let us look at the statement of financial position. You can see here for 2008, the total assets are 54,000, correct? And our current liabilities is stated as 13,000. You can see here current liabilities section, it is stated as 13,000. So it will be nothing but 54,000 minus 13,000, correct? So it's equal to 54,000 minus 13,000, which is going to be 41,000. So our return on capital employed for 2008 is going to be nothing but profit before interest and tax divided by capital employed into 100. So you will get it as 19.34%, right? So I'm stating here as 19.3%. Okay. Now we'll understand for 2007 how we will get the adjusted values. Okay. Firstly, guys, for 2007, as you can see here, we have to calculate the profit before interest and tax, right? So we have been given here profit before tax of 26,400. Correct? So guys, I'll just delete this part because I'll calculate the next one now. I hope this is clear to everyone. So guys, profit before interest and tax. Firstly, the profit before tax is given as 26,400. In this, the finance cost will be added back, that is 1920. Correct? Because the finance cost I will have to calculate before interest. So in order to eliminate the interest, I will add it back because it is reducing my profit. Right? So 26,400 plus 1920. Right? And also I have to calculate for 2007 the adjusted profit before interest and tax. Right? So in order to calculate the adjusted profit before interest and tax, guys, what I will do is I will do a reduction for the profit before interest and tax of 9,900 because I have to eliminate this value, correct? So 26,400, where did it go? Yeah, for 2007 it will be nothing but 26,400 plus the finance cost being added back of 1920 and minus the profit before interest and tax that has been calculated from the sale of division, because you have to calculate the 2007 figures excluding the contribution made from the division which is disposed of or which is sold off, correct? So it will be where did that value go? Yeah, 26,400 plus 1920, 26,400 plus 1920 minus 9,900, correct? So our profit before interest and tax, guys, is nothing but 18,420, and our capital employed will be nothing but, you can see here, the total assets are 70,080, right? It is 70,080 minus the current liabilities of 17,280, right? So is equal to 17,080 minus current liabilities, sorry, 70,000, yeah, minus current liabilities of 17,280. 17,280, right? That's impossible. It's 70,000. I've written 17,000. Yeah. So my current, my capital employed is 52,800. But guys, there is also the division which is included here, correct? So the division was there, which is now sold off, right? So whatever was its carrying value, that will reduce my capital employed because that much value of my assets are gone because the division is sold off, correct? So what is the carrying value of the division? Carrying value of the division is nothing but they sold it for 19,200 and on its sales they got a profit of 2400. That means its carrying value would have been 16,800. So I will reduce that also because that value of assets is gone, right? So it will be nothing but 36,000. Correct? So here my ROCE is thus going to be nothing but 18,420 divided by 36,000 into 100, which will give me 51.1%, 166.7 something. So I'll take it as 51.2%. Okay, I'll take it as 51.2%. Okay, as per question, what is the return on capital employed mentioned? You can see here it is 53.6%, right? So I'll mention here 53.6%. Okay, I'll mention for others also it is 40.5 for gross profit and 23.9 for operating profit. Sorry, 40.5% for gross profit, and for operating profit it is 23.9%. Right? For our interest cover it is 14.75 times and it is 2.24 times. 14.75 times, and here it is 2.24 times. Right? So these are the values which are mentioned as per the question. Now let us calculate each of them for 2008, okay, and 2007. Okay guys, so now here the gross profit margin we are supposed to calculate for 2008. It is fairly simple, I see. Gross profit margin formula, I hope you all remember. Here the formula was nothing but profit before interest and tax. I'm just mentioning the formula for each and every one here, guys. Profit before interest and tax divided by capital employed, right? And here the capital employed was nothing but total assets minus current liabilities, because that is what was mentioned in the question. Otherwise, there are two ways of calculating the capital employed. One is this formula and the other one is nothing but your equity plus the interest bearing finance, that is nothing but non-current liabilities. Okay, so equity plus non-current liabilities will also be treated as your capital employed, but here they are specifically mentioned, so we are calculating it like this. Always remember guys, you can see it from this question also, that your ratio calculation is not as important as the analysis of it is, right? Because your analysis is being asked for 12 marks, whereas your ratios are being asked only for 8 marks. And this is a rare scenario. Otherwise, ratios are usually asked only for 6 marks and analysis for 14 marks. Okay, so please focus on analysis more. Okay, ratios, give it like 10 minutes to calculate, or maybe not more than 15 minutes. For the rest 25 minutes, just keep on mentioning about the analysis or the interpretation of the financial statements as per the ratios. Okay, now let us understand gross profit margin. So for gross profit margin, guys, it will be nothing but the gross profit of 28,800 divided by the revenue of 87,300, right? So it is nothing but gross profit divided by sales revenue, right? So 28,800 divided by 87,300 into 100, we will get the gross profit margin to be 32.98 something. So I'll take it as 32.9%. Okay, I'll just mention it here, 32.9%. Okay. Then the adjusted gross profit margin for 2007 will be what? Firstly, we'll calculate the gross profit, right? So for the gross profit, guys, for 2007, it is mentioned as 48,000, correct? The gross profit is mentioned as 48,000, but we will remove the gross profit from the division which is sold off, right? Which is 15,200. So our gross profit is nothing but 48,000 minus 15,200, which will give us a value of 32,800, right? Now the sales revenue guys is nothing but 1,18,500 minus the sales revenue of the division which is sold off, that is nothing but 37,200, right? So minus 37,200. So our sales revenue will be 81,300, right? So guys, what will be the gross profit margin here for 2007? 32,800 divided by 81,300 into 100, which will give us 40.34%. So I'll write it as 40.3%. Okay. Moving on to the operating profit margin. So for our operating profit margin, guys, we had already calculated profit before interest and tax, correct? So profit before interest and tax for 2008, I'll just mention here 2008, and profit before interest and tax for 2007, right? The adjusted profit before interest and tax. So let us quickly calculate because it might be used in the operating profit margin, correct? So what is the profit before interest and tax for 2008, guys? It is 10,320 plus 10 minus 2,400, right? Is equal to 10,320 plus 10 minus 2,400, that is 7,930. And what is the, so this is the profit before interest and tax for 2008. The profit before interest and tax for 2007 is nothing but 26,400 plus the finance cost being added back, right? 1920 minus 9,900, which is the profit before interest and tax of the division which is sold off, right? So it will be 26,400 plus 1920 minus 9,900, right? So that will give us 18,420. Now operating profit margin. Here guys, what is the operating profit margin? It is profit before interest and tax divided by sales revenue, right? So we'll just take it directly. Sales revenue for 2008 is clearly mentioned here, 87,300, right? So I'll just take 7,930 minus 87,300 into 100. So I will get it in percentage. That is 9.08%, right? So I'll take it as 9.1% approximately. Now, operating profit margin of 2007. So the sales revenue is nothing but, it is 1,18,500, right? You can see here it is 1,18,500 minus the sales revenue of the operation which is sold off, that is 37,200, correct? So minus 37,200, which is going to give us a value of 81,300. So our operating profit margin will be 18,420 divided by this into 100. So we will get it as 22.65%. So I'll mention that 22.65%, right? Now moving on to the interest cover. So guys, gross profit margin also formula I'll state here. It is gross profit divided by sales revenue. Okay. You don't need to mention the formulas. I am just clarifying the values here. Operating profit is profit before interest and tax, or profit from operations, whatever you want to call it, divided by sales revenue. Okay. Now the next formula, that is interest cover. So interest cover, guys, is nothing but again profit before interest and tax divided by finance costs, right? So lastly, net assets turnover. Net assets turnover, guys, is nothing but sales revenue divided by capital employed, and capital employed is the value which is used prior. Okay, in the ROC, that same value can be used here. Okay, so guys, let us calculate now the interest cover. So for interest cover, our profit before interest and tax is already calculated for both years. So it is 7,930. For interest cover, it will be nothing but profit before interest and tax divided by the finance cost, which is 10, right? For 2008, it will be nothing but 7,930 divided by 10. So that is 793. This will not be in percentage, it will be in times. It is representing that the profit of the company that the company has generated. What is the ability of that profit? How many times can that profit pay off the finance cost, right? So that is what is being measured here. So it is measured in times. So that will be nothing but 793 times. So you can see the company's profit has not increased probably by that much amount, but its finance cost probably has reduced a lot, because you can see here the finance cost initially in the previous year was 1920, but now it is just 10. Okay. So in the previous year, we already have our profit before interest and tax, adjusted profit before interest and tax. We will just take that and divide by the finance cost of 1920. So that will give us a value of 9.59. So 9.59 times. Right? I hope interest cover is clear to you all. Now moving on to the last ratio, that is nothing but net assets turnover. Okay guys. So for a net assets turnover guys, what will be the calculation? It is nothing but sales revenue, right? So sales revenue is already we've calculated it to be, this was a direct value, and here the sales revenue we've calculated the adjusted sales revenue excluding the sales revenue earned by the division which is sold off, right? So sales revenue divided by capital employed. Capital employed for 2008 is nothing but capital employed for 2007. I'll mention both again. We had already calculated that but did not save it, right? So capital employed is nothing but total assets 54,000 minus 13,000. Always remember the assets of the operation which is sold off is not reduced from 2008 because it was sold off in 2007. Okay, so don't get confused with that part. 54,000 minus 13,000, that is 41,000, right? It is 54,000, right? Yeah. So 41,000 is the capital employed for 2008. The capital employed for 2007 will be nothing but 70,080 minus 17,280. 70,080 minus 17,280 minus the carrying value of the operation which is disposed of. That is nothing but, you can see here, it was disposed of for 19,200, but they gained a profit of 2.4 million on its disposal. So that means the carrying value would be 19,200 minus 2.4 million, which is nothing but 16,800. Right? So that will also be reduced because that value of assets are gone as that operation is disposed of. So the capital employed here is 36,000. Okay. So our net assets turnover will be nothing but the sales revenue, right? The sales revenue of 2008 is clearly mentioned directly in the question to be 87,300, correct? So I'll just take it as 87,300, and here the sales revenue is already calculated for 2008. I did not remove that part. You can see here 81,300. Sorry, 2007. Right? So we'll just calculate the net assets turnover, guys. It will be nothing but 41,000. Sorry, sales revenue divided by capital employed in, and it is not into 100 because it is in times. So this is 2.129, which is exactly 2.13 times, let's say, right? And the sales revenue divided by capital employed, that is nothing but net assets turnover for 2007, will be nothing but 2.2583. So I'll take it as 2.26 times. Right, guys? Now, always remember one thing, that in your ratios, whenever you calculate, you present it well. If in case they've directly given you columns and you just need to state the answer, so you can also state the answer. Now, as you can see, one thing here, guys, is that in the question stem, they've also mentioned that your answer should provide explanatory notes for the calculations wherever it is appropriate. So you can provide certain notes for certain calculations, whatever you think is necessary to be provided as a note. So maybe I can say the adjusted 2007 ratios do not include the contribution from the 2007 uh, figures, from the figures of the operation that is disposed of, that was in 2007, which in so that means in sales revenue, in gross profit and operating profit, margin of adjusted 2007 ratios, sales revenue and profit from operations of the operation or whatever sector disposed of is excluded, right? You can specify it like that. Also, you can specify that, the carrying amount of the assets disposed of in 2007, that is 19,200, or you can say 19.2 million sale value or fair value. I can just mention sale proceeds less 2.4 million profit on sale, which is nothing but 16.8 million. Okay, you can write it as million or also write the total value, however you feel convenient about it. Okay, so these are certain calculation informations information that I have provided to them. Right now we have calculated this, and we've also given an explanatory note for wherever it was required. Now let us do an analysis of the financial performance comparison. So we have to compare the 2008 figures with the adjusted 2007 figures, right? So interpretation of the financial statements of 2007 adjusted figures not figures, ratios, and 2008 ratios as calculated above. Right? So you can specify like that and then start off with your interpretation. Now, in the analysis, what have they asked you for? Analyze and compare the financial performance and position of Griffin Company for the year ended 31st December 2008 and 2007. So maybe instead of mentioning it like this, so we can just mention it like this here. We can just copy paste this probably. I do not want you to do that, but I am just mentioning that if in case you are in a hurry or something, you can just copy paste it like this here. Why is it not allowing me to copy paste? I think probably it does not allow me to copy paste. Okay, anyway. So if in case if it's not allowing you to copy paste, you can just mention this part, guys. Okay. So analyzing and comparing the financial performance and position. So you can just mention analyzing and comparing the financial performance and position of Griffin Company for the year ended 2008 and 2007 adjusted figures using ratio analysis as calculated in the ratios above. Right? So you can specify it like that. And now let us get started. So always remember guys, when you're representing an analysis or an interpretation of a financial statement, do provide headers to them. Right? So do provide headers to them. Firstly, you're stating about the position or maybe you're stating about the performance, right? So maybe we are stating about the performance. So do provide headers like these. Maybe keep it in bold and then provide whatever information you have or whatever you want to provide about the performance. So firstly, guys, let us talk about the division which is sold off, right? So the division which is sold off, you can also calculate ratios within that. So I will show you how the division sold was having gross profit margin of, let us calculate the gross profit margin of the division which is sold off separately, because we have the relevant statement of profit or loss, right? So it is 15,200 divided by 37,200, right? So gross profit divided by sales revenue, that is nothing but just calculate it guys. 15,200 divided by 37,200 into 100, that will give us 40.8%, right? So I'll state it as 40.8%. 8%, and I'll also show the calculation here. That is nothing but 15,200 divided by 37,200 into 100, right? And also maybe provide the operating profit margin so that you can compare it with the industry average, with the adjusted 2007 and also the 2008 profits. Okay, so the division which was sold off was having a gross profit margin of 40.8% and an operating profit margin of nothing but, what is the profit before interest and tax? 9,900 divided by 37,200, which is the sales revenue, right? So I'll just state it as 9,900 divided by 37,200 into 100. So that will give us the operating profit margin as well. So what is the operating profit margin, guys? 9,900 divided by 37,200 into 100. That will give you 26.6%. Right? So you have stated that the division which is sold off, they had a gross profit margin and an operating profit margin as stated here, guys. So, and yes, for the year 2007, right? So compared to the profit margins of taken out, you can compare it with the profit margins which are taken out of 2007 and of 2008. Okay, just give me 1 second, guys. Sorry. Yes, let us continue. Yeah, guys. So Now, the compared to the profit margins taken out from adjusted 2007 and 2008 figures, what is there to state? Sorry, not here. You can see here, guys, there is a similarity. Now, here, as per question, it was 53.6%. The adjusted profit margin for, sorry, the return on capital employed. This is, firstly, see, gross profit margin is 40.3%. And also of the company which is disposed of, it is 40.8%. So it is very much similar, right? Then also, the operating profit, it is 22.65%, right? So here also it is 22.65%, right? I will not compare it with 2008 figures. Adjusted 2007 figures is nothing but very much similar, right? Correct? So you can see they are similar, right? So compared to the profit margins taken out from adjusted 2007 figures, the operation disposed of had similar profit margins, right? Thus, it can be stated that if there would be, or if there are any sharp deteriorations or adverse changes in the 2008 figures, the operation disposed of cannot be held solely responsible. That means what we are trying to say here is that the profits of the operation which is sold off, they were very much similar to the company itself, right? So the company's adjusted profit is also 40.3 and it is very much similar, 40.8. So that means it was not affecting your company so much, even though they are saying that it was not good for the company, is the reason why, or it was not matching the company's scope, is the reason why it was sold off, right? So, but then we are saying that the operating profit margin and the gross profit margin is very much similar, is the reason why they cannot be solely responsible for any adverse changes or any sharp deteriorations to the company's financial performance, right? Or adverse changes, I would rather say, to the financial performance of the company in 2008. To the financial performance of the company in 2008, right? So you can mention it probably like this. I'll just mention it here. Okay. So I hope this point is clear. Like this, you can make 2-3 paragraphs and state relevant information about it. Okay. Then you can also, obviously, this was just one pointer that I've stated that you can compare. Now you can also state that the 2008 and 2007 adjusted figures, how are they affected, right? So you can see here that firstly, your gross profit margin, it was 40.3% in 2007 and it became 32.9% in 2008. Correct? So, in 2007, now let us see. In 2007, firstly, the sales revenue is 1,18,500 and from this, we are calculating the adjusted values, right? We are calculating the adjusted values. So, we can state firstly, the sales revenue excluding the operation disposed of in 2007 is how much? 1,18,500 minus 37,200, correct? So that is nothing but 81,300, right? So you can see the sales revenue in 2007 was 81,300, whereas in 2008 it is how much? You can see here in 2008 it is 6,000 higher than it, right? That is 87,300. It is 6 million higher than in 2007, that is 87,300, correct? So I can just mention here not 6 million, 6,000, right? So that is 87,300. Yet you can see here the sales revenue has increased, correct? But you can see here the gross profit margin has still deteriorated from 40.3% to 32.9%. Yet the gross profit margin, guys, here what you can say, appears to look poor. Gross profit margin of 2008 appears to look poor as compared to 2007. So you can say, why is it poor? That is probably because the cost of sales is how much? It is 70,500, but you are calculating the adjusted cost of sales, right? So you will reduce 22,000 worth of cost of sales. So what is the adjusted cost of sales? It is nothing but, I'll just mention it here. Cost of sales is 7,500, correct? 7,500 minus 70,500 minus the cost of sales of 22,000, right? So 70,500 minus 22,000. So we will identify the cost of sales to be 48,500. And now the cost of sales have become how much for this year? Always remember you are comparing it with the adjusted, so don't forget to adjust. 58,500, right? So now it has become 58,500, right? So you can say as compared to 2007, as a result of maybe say an inappropriate maintenance, not inappropriate, a poor maintenance or a weak maintenance of 2000, okay, a weak maintenance of which year? Right, of 2008 cost of sales, as they have increased by, so you can also calculate here in percentage. So how do you calculate in percentage? From 48,500 it has increased to 58,500. So how do you calculate that from 48,500 if it has increased at 58,500? How much percentage increase is there? So you will take 58,500 minus 48,500, that is the difference between the two, and divide it by 48,500, right? Divided by 48,500. So you will get it in percentage, right? Into 100 if you do. So you will get it in percentage. Okay. Not into 100. Sorry. Why is this showing like this? Wait, let me just check. For 58,500, okay, it is dividing first and then calculating, right? So firstly, the difference is 10,000. So I'll just do 10,000 divide by 48,500. We are taking 48,500 as the base because we have to identify that from 48,500 how much is the increase. Okay, so you will get it to be into 100 if you do. Okay, why is it showing like this? It is going to be 20.6%. So as the cost of sales have, as they have increased by 20.6% since 2007, right? So you can clearly mention values like these. I hope this calculation was clear to you. Then again, you can also state about the operating profit margin. Operating profit margin. Let us see what is the operating profit margin. So I'll just delete this part now so that I can show you the operating profit margin calculation. So for operating profit margin, we've already calculated the adjusted figure. Our operating profit margin, guys, was 22.65%, but now it has reduced to 9.1%, right? So operating profit margin was 22.65% in 2007, which has reduced to what percentage? 9.1%. 9.1%. Maybe you can say which has had a dramatic drop. You can mention words like these, so it would impress probably the examiner. Okay, so operating profit margin from 20 was 22.65% in 2007, which has had a dramatic drop in 2008 to 9.1%, and for which what is responsible? So you can see here the responsibility lies upon what was the distribution cost. It is 12,720, and obviously the distribution cost is reduced here of 2,300. So what are the distribution costs of 2007? It is 12,720, right? Minus 2,300, correct? So the distribution costs were nothing but 10,420 in the year 2007, but in the year 2008 it is 9,360. That means the distribution cost has reduced. So probably it is because of the administrative expenses being increased. So guys, let us look at the administrative expenses. So we'll ignore the distribution costs, right? Administrative expenses is nothing but 6,960 minus the administrative expenses of the operation which is sold off, that is 3,000, right? So 6,960 minus 3,000, that is 3,960, right? And now, so we will mention operating profit margin has actually has had a dramatic drop from 22.65% to 9.1%, partly because of the ill maintenance of cost of sales of 2008, right? And also as a result of what is the increase? You can see here it was 3,960, the adjusted administrative expenses, and now it has become 11,510, right? So this is almost like 3 times, right? 11,510 as a result of the operating profit, or sorry, not the operating profit. What is this? The administrative expenses, right? As a result of the administrative expenses being 3 times more in 2008 as compared to 2007. So you can mention like this certain points regarding performance, correct? So there could be many other points. I'm not teaching you each and every point here, guys, right? Then you can also specify regarding position, right? So now you can see here, they have also given us an industry average. So use the industry average also. So industry average for operating profit margin is 23%, correct? So you can state here the operating profit margin of Griffin Company for 2007 was well above the industry average, right? So for 2007, what was the industry average? It was 21%, right? And the operating profit margin for 2007, actually, it was not that great, right? So we are not mentioning this part. The operating profit margin was of 2007 of Griffin Company was well in well at par maybe with the industry average, but for 2008 the operating profit margin has had a great fall and is way low as compared to the industry average of 2008, right? So you can mention also like that, comparing it with the industry average, guys. Okay. So I hope this points regarding the performance is clear to you all. Now, regarding the position, you can mention anything about the return on capital employed, right? So, return on capital employed of the company for the year ended 2007 was how much? We have calculated it to be 51.2%, right? Was 51.2%, which has had a sharp deterioration in 2008 to be, how much is it now? 19.2%, I guess, yeah? 19.3%. To be 19.3%. Why so? Because firstly, guys, you can see here the current liabilities are actually in 2007 the current liabilities were higher than uh, the current liabilities were higher than in 2008, right? But you can see the assets has dropped down from 70,000 to 54,000, right? But the assets, we are comparing it with the adjusted assets, so from here the assets are also reduced. So the ROC is probably dropped because the company maybe has a less profit probably. Let us see. Yes. So the company's profit is 18,480. Correct? 18,480 is the profit for the year. But from this 9,900 is reduced. Maybe because as the profit and the capital employed of the company is reduced since 2007, right? Maybe because the operation is disposed of. So you can mention regarding return on capital employed. You can also mention regarding finance cost, guys. Now I'm not explaining each and everything in detail because this you only have to interpret and you only have to mention, right? The finance cost. Now you can say for this ratio. So you can speak about each and every ratio in detail, right? So here you can see the interest cover was 9.59 times, but now it is 793 times. The interest cover for the company has shown a great improvement as maybe the company has reduced its non-current liabilities or debts in 2008, thus resulting in the finance cost to reduce dramatically from 10, right? Sorry, from 1920 in 2007 to 10 in 2008, right? Thus enhancing the company's ability to ensure that the finance costs can easily be covered, right? The finance cost can be easily covered, right, guys? By the profit from operations, right? That is nothing but 793 times for 2008. I hope this is clear. Like this, you can mention regarding the position also. Then you can also state other matters. Like if you know of any other matters, so you can give a header other matters. Like you can say here, the operation, the sale proceeds received from the disposal of an operation in 2007 perhaps is used for the payment of long-term debts of Griffin Company, which has brought which has brought the finance cost of Griffin Company down to 10,000 from 1920. Now, whatever the other values, you can state that in values. Always put dollars or value to it. Okay. So, like this, you can also state a heading called other matters. So, see, guys, like this, you're supposed to interpret the financial statements. Okay. Now, I hope you're clear with the other matters as well. So, like this, you can actually state regarding other matters. And lastly, you're going to provide a conclusion, right? Now, in the conclusion, you can write anything about the company's activities. Probably here it is mainly a disposal. So you can write some things about the disposal. Now, I'm not mentioning each and everything which is to be stated here. Okay. I've already clarified much. Okay. So you can see, do what things you can compare the ratios. What is the difference between them in percentage? You can mention the values like that. You can state that, the finance cost has quadrupled if in case it has, increased by 4 times or something. You can state it has increased by 3 times, tripled or something. You can use words like that. You can say that if there is a fall, you can say a dramatic fall, or any words can be used, and you can present it that way. Okay, so I hope the presentation and what you're supposed to write, how you're supposed to write, is clear to you all. We are just going to solve this one paper, guys. We won't be able to complete one more mock paper, so we will just solve one more section C sum for you that was pending because we've just completed 3 section C sums. So overall, our revision session will be completed today with solving one more question of section C from your sample questions. Okay. So with this, we come to an end of our paper, that is our mock paper, which is already done. Now we'll take a break of 20 minutes, after which we return with our sample section C question. Okay. I hope this solution was pretty much clear to all of you. We've calculated all the ratios, guys, here. Okay, I've shown you all the calculations, and I've also shown you how you're supposed to present each and everything here. Okay, we've already spent a lot of time on this. So I'm ending up this session for you. I mean this sum for you here, and we'll take a break of 20 minutes, after which we'll return with the next part. ओके गाइस, आई होप हम लोग सब लोग वापस आ चुके हैं। अभी एक क्वेश्चन हमारा सैंपल सी क्वेश्चन में बाकी था, तो वो एक लास्ट क्वेश्चन कर लेते हैं। ये भी हमारा ऑपरेटिंग प्रॉफिट मार्जिन पे ही है, सॉरी ये भी हमारा रेशियोज पे ही है। सो लेट अस गेट स्टार्टेड नाउ। दिस क्वेश्चन इज ऑन ड्यूक कंपनी। ड्यूक कंपनी इज अ रिटेलर विच स्टोर्स इन न्यूमरस सिटी सेंटर्स। ठीक है, वो लोग रिटेलर्स है और उनके स्टोर्स बहुत सारे सिटीज में है। On 1st January 2008, Duke Company acquired 80% of the equity share capital of Smooth Company. मतलब ये कंसोलिडेशन का है, लेकिन कंसोलिडेशन वाला रेशियो सम है। ठीक है, तो ड्यूक कंपनी ने एक और कंपनी को एक्वायर किया, दैट इज नथिंग बट स्मूथ कंपनी, राइट। और उन लोग ने 80% एक्वायर किया, विच इज अ सर्विस कंपनी स्पेशलाइजिंग इन ट्रेनिंग एंड रिक्रूटमेंट। मतलब वो सर्विस कंपनी है जो ट्रेनिंग एंड रिक्रूटमेंट में स्पेशलाइज करती है। दिस वॉज द फर्स्ट टाइम ड्यूक कंपनी हैज एक्वायर्ड अ सब्सिडरी कंपनी। ये पहली बार है उन लोग ने एक सब्सिडरी कंपनी को खरीदा है। द कंसिडरेशन फॉर स्मूथ कंपनी कंसिस्टेड ऑफ अ कैश एलिमेंट and the issue of some shares in Duke company to the previous owners of Smooth company। मतलब जब उन लोग ने कंपनी को खरीदा तो उन लोग ने एक तो कैश दिया है और कोई शेयर्स इशू किए हैं इन ड्यूक कंपनी, राइट। मतलब ड्यूक कंपनी ने शेयर्स इशू किए, शेयर एक्सचेंज के थ्रू कंपनी को खरीदा है, स्मूथ कंपनी को, राइट। ड्यूक कंपनी हैज began to consolidate Smooth company into its financial statements but has yet to calculate the non-controlling interest and the retained earnings। मतलब उन लोग ने कंसोलिडेट तो कर लिया, लेकिन रिटेन्ड अर्निंग्स और नॉन कंट्रोलिंग इंटरेस्ट मतलब हमारा ये दोनों कैलकुलेशन जो है अब तक बाकी है। डिटेल्स ऑफ द रेलेवेंट इंफॉर्मेशन इज प्रोवाइडेड इन नोट्स 1 एंड 2। ठीक है, तो मतलब उसके लिए जो भी डिटेल्स है वो नोट्स 1 एंड 2 में प्रोवाइडेड है। यहाँ पे हमें प्रॉफिट फ्रॉम ऑपरेशन, करंट असेट्स, शेयर कैपिटल, शेयर प्रीमियम, रिटेन्ड अर्निंग्स, नॉन कंट्रोलिंग इंटरेस्ट, लॉन्ग टर्म लोन्स एंड करंट लायबिलिटी सब कुछ दिया हुआ है। ओके, अभी पहले हमें दिया हुआ है द फेयर वैल्यू ऑफ नॉन कंट्रोलिंग इंटरेस्ट इन स्मूथ कंपनी एट 1st January 2008 was deemed to be 3.4 million। ठीक है, तो फेयर वैल्यू दिया हुआ है हमें नॉन कंट्रोलिंग इंटरेस्ट का। तो आई थिंक ये सारे एडजस्टमेंट्स है। पहले हम लोग वर्किंग नोट्स बनाना शुरू करते हैं। रिक्वायर्ड क्या है, calculate the non-controlling interest and retained earnings to be included in the consolidated financial statements as at 30th June 2008, right। फिर based on your answer to part A and the financial statements provided, calculate the following ratios for the year ended 30th June 2007 and 2008। कौन से ratios calculate करने, current ratio, return on capital employed and gearing which is debt upon equity। ठीक है, using the information provided and the ratios calculated above, comment on the comparative performance and the position for 2 years ended, that is 30th June 2007 and 2008. Note, your answer should specifically comment on the impact on acquisition of Smooth Company on your analysis। मतलब मेनली इम्पैक्ट क्या हुआ एक्विजिशन ऑफ स्मूथ कंपनी के बाद ड्यूक कंपनी पे, वो हमें मेंशन यहाँ पर करना है। ठीक है, अभी ये जो नॉन कंट्रोलिंग इंटरेस्ट और ये इसका कैलकुलेशन है, इसके लिए हमें 6 मार्क्स दे रहे हैं वो लोग, राइट। इसके लिए हमें 6 मार्क्स मिल रहे हैं। फिर बेस्ड ऑन योर ये जो 3 रेशियोज कैलकुलेट करने उस पर 4 मार्क्स और मिल रहे हैं। और ये जो पूरा एनालिसिस हमें करने बोला है इसके लिए बाकी के 10 मार्क्स मिल रहे हैं। तो मार्क्स कमाना शुरू करें, राइट। पहले तो गाइस हम लोग लिख देते हैं ग्रुप स्ट्रक्चर क्या है। तो ड्यूक कंपनी ने एक्वायर किया है स्मूथ कंपनी को, 80% एक्वायर किया है एंड ऑन 1st January 2008। एंड ये जो हमें प्रोवाइड किया है दैट इज फॉर 30th June 2008, है ना। मतलब ये मिड ईयर एक्विजिशन है। राइट। अभी हमारा वर्किंग नोट 4 बनाते हैं, दैट इज नथिंग बट नॉन कंट्रोलिंग इंटरेस्ट। ठीक है, तो पहले तो गाइस नॉन कंट्रोलिंग इंटरेस्ट में क्या आता है, जो भी नॉन कंट्रोलिंग इंटरेस्ट एट फेयर वैल्यू है, राइट। हमारा वर्किंग नोट 4 जो बनता है हमारा कंसोलिडेटेड स्टेटमेंट ऑफ फाइनेंशियल पोजीशन में, इसको इधर तो वर्किंग नोट 2 लिखेंगे। एनसीआई एट फेयर वैल्यू तो ऑलरेडी दिया हुआ है क्वेश्चन में। यू कैन सी हियर द फेयर वैल्यू ऑफ नॉन कंट्रोलिंग इंटरेस्ट in smooth company at 1st January 2008 was deemed to be 3.4 million, right? तो ये हो गया हमारा 3400, करेक्ट। अब बाकी के एडजस्टमेंट्स देखते हैं। स्मूथ कंपनी, okay, the retained earnings of Duke Company in its financial statements at 30th June was 13.2 million. ये तो retained earnings के कैलकुलेशन में आएगा। Smooth Company made a profit for the year 30th June 2008 of $7 million. मतलब प्रॉफिट जो बनाया फॉर द ईयर 30th June 2008, पोस्ट एक्विजिशन प्रॉफिट कितना होएगा, तो पूरे साल का प्रॉफिट बनाया 7,000, राइट। लेकिन हम लोग ने तो 6 महीने के लिए एक्वायर किया था, तो 6 मंथ्स का ही हमें मिलेगा। एंड एनसीआई में कितना जाएगा पोस्ट एक्विजिशन प्रॉफिट, 20%, करेक्ट। तो इसका वैल्यू कितना हो गया, 7,000 इंटू 6 डिवाइड बाई 12 इंटू 20%, राइट। फर्स्ट एडजस्टमेंट यहां पर हो गया। फिर उसके बाद ड्यूक कंपनी इनकर्ड प्रोफेशनल फीस ऑफ 0.5 million ड्यूरिंग द एक्विजिशन which have been capitalized as an asset in the consolidated financial statements. तो ये तो है, ये तो ग्रुप रिटेन्ड अर्निंग्स में से माइनस होएगा, ये कैपिटलाइज नहीं होगा, राइट। फिर द फॉलोइंग इश्यूज आर आल्सो रेलेवेंट टू द कैलकुलेशन ऑफ नॉन कंट्रोलिंग इंटरेस्ट एंड रिटेन्ड अर्निंग्स। मतलब ये नॉन कंट्रोलिंग इंटरेस्ट एंड रिटेन्ड अर्निंग्स की कैलकुलेशन में भी आएगा। At acquisition, Smooth Company's net assets were equal to their carrying amount, with an exception of brand name, which had a fair value of $3 million, but was not recognized in Smooth Company's individual financial statements. It is estimated that the brand had a useful life of 5 years at first Jan. Right? मतलब यहाँ पे फेयर वैल्यू डेप्रिसिएशन जो है वो चार्ज होगा, करेक्ट। वैसे तो वर्किंग नोट में 2 में चार्ज होके डायरेक्टली डिस्ट्रीब्यूट होके आता है एडजस्टेड प्रॉफिट, जो भी पोस्ट एक्विजिशन प्रॉफिट है। लेकिन सिंस हम लोग यहाँ पे वो वर्किंग नोट टू नेट एसेट्स ऑफ सब्सिडरी नहीं बना रहे, तो पोस्ट एक्विजिशन जो फेयर वैल्यू डेप्रिसिएशन लगता है वो यहाँ पे अलग से लगाना पड़ेगा, और वो भी सिर्फ 20%, ठीक है। तो अभी फेयर वैल्यू था कितना, 5,000, राइट। कितना था, सॉरी 3,000, राइट, 3,000, राइट। एंड यूजफुल लाइफ कितना था गाइस, यूजफुल लाइफ इस पे था 5 इयर्स का, तो 1 डिवाइड बाई 5। लेकिन हमें चार्ज करना है सिर्फ 6 महीने का डेप्रिसिएशन, और सिर्फ 20% लगेगा यहाँ पे एनसीआई को, करेक्ट। तो हमारा फेयर वैल्यू डेप्रिसिएशन कितना हो गया, 3,000 इंटू 1 डिवाइड बाई 5 इंटू 6 डिवाइड बाई 12 इंटू 20%, तो ये हो गया -60, करेक्ट। फिर गाइस और क्या दिया हुआ है, ओके, नेक्स्ट एडजस्टमेंट ऑन 31st, okay, on 30th June 2008, Smooth Company sold land to Duke for 4 million. अभी यहाँ पे सेल ऑफ नॉन करंट एसेट है, तो यहाँ पे हम लोग यूजुअली तो वो पूरा बनाते हैं कॉलम एंड वर्किंग जो भी हमें करना रहता है डेप्रिसिएशन का और ये सब, पर ये लोग ने बेचा ही ईयर एंड पे है, तो यहाँ पे कोई डेप्रिसिएशन तो आएगा ही नहीं, राइट, सिर्फ प्रॉफिट आएगा। अब बेचा किसने है, सब्सिडरी कंपनी ने, तो 20% एनसीआई में से रिड्यूस होगा और बाकी का 80% ग्रुप रिटेन्ड अर्निंग्स में से, राइट। तो सेल ऑफ नॉन करंट असेट का जो भी पॉप है वो यहाँ पे माइनस होएगा। उसका वैल्यू कितना आएगा गाइस, यस, उसका वैल्यू कितना आएगा, इट विल बी नथिंग बट 2,500 का उसका, सॉरी 2,500 का उसका कैरिंग वैल्यू था, करेक्ट। लेकिन उसको बेचा 4 मिलियन में, मतलब प्रॉफिट कितना आया 1500। कोई डेप्रिसिएशन तो चार्ज नहीं हुआ, तो डायरेक्टली इसका 20% जो है एनसीआई को जाएगा। राइट, ये हो गया 300 रिड्यूस। फिर स्मूथ कंपनी इज बेस्ड इन द सर्विस इंडस्ट्री and significant part of its business comes from three large profitable contracts with entities which are both well established and financially stable. Duke Company ने कोई additional funds borrow नहीं किए during the current year and has never used a bank overdraft facility. The following ratios have correctly calculated based on the financial statements. मतलब receivables और inventory दिया हुआ है already, ठीक है। तो आई थिंक यही एक एडजस्टमेंट्स थे जो हमारे नॉन कंट्रोलिंग इंटरेस्ट में थे। अब हम लोग इसका सम टोटल कर लेते हैं, तो हमें नॉन कंट्रोलिंग इंटरेस्ट के मार्क्स मिल जाएंगे। राइट, दैट विल बी 3740। वर्किंग नोट 3 बनाते हैं, दैट इज ग्रुप रिटेन्ड अर्निंग्स। पेरेंट्स रिटेन्ड अर्निंग्स गाइस पहले तो आएगा, राइट। पेरेंट्स रिटेन्ड अर्निंग्स डायरेक्टली दिया हुआ है, दैट इज 13.2 मिलियन, ईयर एंड पे ही दिया हुआ है, करेक्ट। तो सीधा वो लिख देता है 13.2 मिलियन। फिर इसमें पोस्ट एक्विजिशन प्रॉफिट्स ऑफ सब्सिडरी भी मिलेगा, दैट इज नथिंग बट 7,000 जो है सब्सिडरी का प्रॉफिट फॉर द ईयर है, हमने 6 महीने के लिए एक्वायर किया, इनटू हमें 80% मिलेगा ग्रुप में, करेक्ट। 7,000 into 6 divided by 12 into 80%. So that will be 2,800. फिर फेयर वैल्यू डेप्रिसिएशन जो है ग्रुप को भी चार्ज होगा, राइट। वो तो एनीवे चार्ज होता है, खाली हम लोग अलग से दिखाते नहीं है क्योंकि हमारा एडजस्टेड प्रॉफिट आ जाता है नेट एसेट्स ऑफ सब्सिडरी एट एक्विजिशन में डायरेक्टली इनटू 80%। एंड दस हमारा वैल्यू होगा into 6 divided by 12 into 80%, राइट। फेयर वैल्यू डेप्रिसिएशन, फिर जो भी सेल ऑफ नॉन करंट एसेट है वो भी यहां से रिड्यूस होगा, दैट इज नथिंग बट 1500 into 80%, करेक्ट। राइट, फिर प्रोफेशनल फीस जो लगा था वो हमारा प्रॉफिट को जो है वो कम करेगा, बिकॉज वो एक्सपेंस के तरह ट्रीट होएगा। और उसका वैल्यू कितना था गाइस, यस यहाँ पर 0.5 मिलियन, राइट, मतलब 500। तो हमारा ग्रुप रिटेन्ड अर्निंग्स का वैल्यू आ गया 14,060, ठीक है। इससे हमें 4 मार्क्स तो पहले के मिल गए, राइट। अब आगे बढ़ते हैं, और क्या चाहते हैं वो लोग, ओके सॉरी 6 मार्क्स मिल गए, राइट। अब आगे क्या चाहते हैं वो लोग, चाहते हैं कि हम लोग अपना करंट रेशियो, रिटर्न ऑन कैपिटल एम्प्लॉयड एंड गियरिंग कैलकुलेट करें, राइट। तो 2008 के लिए इधर बनाता हूं मैं, एंड 2007 के लिए इधर बनाता हूं। ठीक है, पहले यहाँ पर है गाइस करंट रेशियो, राइट। सो गाइस करंट रेशियो कितना होगा, सॉरी मैं वापस वापस वहां पर जा रहा हूँ, वो पेपर तो हमारा हो चुका है। अभी गाइस हमारा करंट रेशियो कितना होगा, लेट अस कैलकुलेट करंट रेशियो मतलब नथिंग बट करंट असेट्स अपॉन करंट लायबिलिटीज, राइट? सो करंट असेट्स 2008 का यहाँ पे दिया हुआ है 30,400 डिवाइड बाय करंट लायबिलिटीज दिया हुआ है 21,300, राइट? 2008 का तो डायरेक्टली स्ट्रेट फॉरवर्ड ही है। ये सब एडजस्टमेंट्स जो है ये 2008 में ही होंगे। करंट असेट्स कितने हैं? 30,400 डिवाइड बाय करंट लायबिलिटीज 21,300, राइट? कितना हो गया ये? यहाँ पे कैलकुलेशन कर लेते हैं। वेट, यहाँ पे मैं आपको कैलकुलेट करके बता देता हूँ। 30,400 डिवाइड बाई 21,300, ये हो गया 1.4, तो 1.42:1, राइट? I'll write it as 1.43:1। अब 2007 का कैलकुलेट करें गाइस। 2007 का कितना है? करंट असेट्स 28,750, करंट लायबिलिटीज 15,600। So 28,750 डिवाइड बाय 15,600, करेक्ट? सो ये आ गया हमारा 1.84। सो यहाँ पे भी लिख देता हूं, करंट रेशियोज, ओके अलग से ही लिखना पड़ेगा। दैट इज 28,750 और 15,600, करेक्ट? ओके, ये आ गया हमारा 2007 का करंट रेशियो। ये जो हम लोग ने यहाँ पे कैलकुलेट किया 1.84, और आई जस्ट टेक इट एज 1.8:1। ठीक है, यहाँ पे भी 1.4 ही ले लेता हूँ। ओके, हमारा करंट रेशियो हो गया। फिर और क्या है? रिटर्न ऑन कैपिटल एम्प्लॉयड। ठीक है, तो रिटर्न ऑन कैपिटल एम्प्लॉयड का कितना होगा 2008 का? 2008 में सब्सिडरी को एक्वायर किया है, डोंट फॉरगेट दैट। ठीक है, पहले तो प्रॉफिट बिफोर इंटरेस्ट एंड टैक्स, मेरा प्रॉफिट फ्रॉम ऑपरेशंस 14,500 दिया हुआ, राइट? सो ये हो गया 14,500 डिवाइड बाय कैपिटल एम्प्लॉयड। कैपिटल एम्प्लॉयड हम लोग कैसे कैलकुलेट कर सकते हैं? यहाँ पे तो हम लोग पूरे असेट्स नहीं दिए हुए, तो हम लोग को लॉन्ग टर्म लोन्स और अपना शेयर कैपिटल और ये सब दिया हुआ है, तो हम लोग वही ले लेते हैं, राइट? सो शेयर कैपिटल ऑफ 11,000 प्लस शेयर प्रीमियम ऑफ 6,000, करेक्ट? फिर हमारा नॉन कंट्रोलिंग इंटरेस्ट है, सॉरी लॉन्ग टर्म लोन्स है 11,500, राइट? सो 11,000, 6,000 प्लस 11,500 प्लस नॉन कंट्रोलिंग इंटरेस्ट और रिटेन्ड अर्निंग्स भी हमारा इक्विटी है 11,000 प्लस 6,000 प्लस कितना है गाइस? 11,500 हमारा लॉन्ग टर्म लोन्स प्लस नॉन कंट्रोलिंग इंटरेस्ट का 3,740 जो हमने कैलकुलेट किया है, प्लस 14,060 जो हमारा रिटेन्ड अर्निंग्स है, राइट? तो ये हो गया हमारा आरओसी, राइट? तो आरओसी कितना आएगा? पहले तो इसका टोटल कर लेते हैं। 11,000 प्लस 6,000 प्लस 11,500 प्लस 3,740 प्लस 14,060, 46,300, राइट? सो 14,500 डिवाइड बाय 46,300 इंटू 100 करेंगे तो हमें आ जाएगा 31.31%. ओके, I'll take it as 31.3%. ओके, अब इधर आरओसी कितना आएगा 2007 में तो कुछ एक्वायर ही नहीं किया था, राइट? सो उसका तो डायरेक्टली होएगा, दैट इज 12,700 जो हमारा प्रॉफिट फ्रॉम ऑपरेशंस है, डिवाइड बाय इक्विटी प्लस लॉन्ग टर्म लोन ना. इक्विटी में क्या क्या 8,000 प्लस 2,000 प्लस 7,000. तो कितना हो जाएगा ये 8,000 प्लस 2,000 प्लस 7,000 17,000 से 12,700 डिवाइड बाय 17,000 इंटू 100 करेंगे ऑब्वियसली. सो ये आ गया 74.7%. करेक्ट, राइट? कुछ तो गलत किया है. 8,000 प्लस 2,000 प्लस 7,000. करेक्ट, और कुछ भी है क्या? यस, 9,400 तो हमने ऐड ही नहीं किया जो दिया हुआ है रिटेन्ड अर्निंग्स, राइट? रिटेन्ड अर्निंग्स हम लोग ऐड करना भूल गए. सो इट विल बी 8,000 प्लस 2,000 प्लस 7,000 और प्लस 9,400 भी है. तो 19,400 प्लस ये हो गया 19,400 प्लस 7,000 दैट विल बी 26,400. करेक्ट, सो ये आ गया 41.1%, 48.1%. सो मैं उसको अलग से लिख देता हूं 48.1%, राइट? आई होप क्लियर है आप सबको. मूविंग ऑन टू द लास्ट पार्ट दैट इज गियरिंग. So gearing is guys nothing but debt upon equity, right? So debt कितना है? Let us see. Non current liabilities हमारा कितना है? Long term loans 11,500. करेक्ट, 11,500 डिवाइड बाय इक्विटी कितना है 11,000 प्लस 6,000 प्लस हमारा 14,060 प्लस 3,740. करेक्ट, तो इसका टोटल कितना होएगा 11,000 प्लस 6,000 प्लस 14,060 प्लस 3,740, right? That is 34,800. So 11,500 divided by 34,800 into 100 तो हमें परसेंटेज में मिल जाएगा 33% अप्रोक्सीमेटली. ओके, एंड इधर क्या होएगा गियरिंग? इधर तो काफी स्ट्रेट फॉरवर्ड ही होगा. 7,000 डिवाइड बाय ये तीनों का एडिशन दैट इज 19,400, राइट? इंटू 100 करेंगे तो ये आ गया 36%. तो हमने यहाँ पे कमा लिए 4 मार्क्स और. ठीक है, अभी यहाँ पे जो भी इन लोग इसमें मेंशन करने बोल रहे हैं, ठीक है, यूजिंग द इंफॉर्मेशन प्रोवाइडेड कैलकुलेट द रेशियोज अबव। तो ये तो हमने कैलकुलेट कर लिया, अभी हम लोग को खाली इंटरप्रिटेशन करना है। सो इंटरप्रिटेशन तो गाइस आप यहाँ पे गो थ्रू कर सकते हो बाद में। ये जो सम है ये ड्यूक कंपनी सम है, राइट, ड्यूक कंपनी, जो आई थिंक क्वेश्चन नंबर 400 के आसपास आता है, राइट। मेरे बुक में तो ये क्वेश्चन नंबर 427 है, आपके बुक में आई डोंट नो किस क्वेश्चन में होगा ये, बट प्लीज इसको गो थ्रू कीजिए, आपको इसमें इसका एक्सप्लेनेशन भी मिलेगा। अभी यहाँ पर जो है एक्सप्लेनेशन हर चीज का मैं दे नहीं सकता, क्योंकि हमें रेशियोज जो है उसको इंटरप्रेट तो खुद से ही करना है, तो पर्सन टू पर्सन ही डिपेंड करता है। तो यहाँ पे आई होप आप इसको खुद गो थ्रू करेंगे एंड आपको इसमें क्लैरिटी मिल जाएगी। ओके गाइज, सो विद दिस हमारा पूरा जो सिलेबस है वो कवर हो चुका है एक्सेप्ट फॉर वन मॉक पेपर। वो बहुत इजी मॉक पेपर ही है, तो आप जितने मॉक पेपर्स खुद से सॉल्व करेंगे आपके लिए बेटर होगा। सो प्लीज गो थ्रू दोज मॉक पेपर्स। इसके साथ हम अपना पूरा हिंदी यूट्यूब लाइव रिविजन सेशन को कंप्लीट करते हैं। आई होप आपको पूरी क्लैरिटी मिल गई है, एंड अगर कोई भी डाउट्स है तो आप अपने यूट्यूब पे पूछ सकते हैं मुझे, मैं आपको डायरेक्टली वहां पे रिस्पॉन्ड कर दूंगा। सो विद दिस वी एंड आवर यूट्यूब लाइव रिविजन सेशन गाइज। मैं आपको सिर्फ ऑल द बेस्ट बोलना चाहता हूँ, प्रैक्टिस करते रहिएगा, ऐसे डिफरेंट टाइप्स ऑफ करंट असेट्स कैलकुलेशन, हमारा रेशियोज कैलकुलेशन भी आपको समझ में आने चाहिए। तो आई होप आपको ये पूरा समझा हो। अभी नेक्स्ट टाइम जब हम लोग मिलेंगे तो आपको अगर इंटरेस्ट है तो प्लीज यूट्यूब रिविजन सेशन के बाद हमारे ऑनलाइन लाइव क्लासेस भी ज्वाइन कीजिए, ताकि आपको इंटरेस्टिंग लगे और एफआर जो है सब्जेक्ट में मजा आए, एंड और भी सब्जेक्ट्स हमारे हैं जहाँ पे और फैकल्टीज है जिसमें आपको और मजा आएगा विद ओनली IIC लक्ष्य। तो मिलते हैं जब भी आप यूट्यूब आप ऑनलाइन लाइव